This is Mike, and in this video, we're going to talk about silver, and then we'll make our way to gold. So if you didn't see my previous chart, I said that gold is going to have a reset. Okay, the pattern indicates that gold is more than likely going to go below $20 again, because this is the pattern. This is the zigzag that is probably over 1,000 years old. Okay, not quite. But it could be. Now, it depends because I only got chart data from 1344 for gold, and I believe silver is in a similar pattern, except it's a little bit different. Okay, so I'll explain the zigzag concept to you so you can understand what I mean. So, in a zigzag, you've got your first leg, and then you've got your corrective patterns, right? You've got your A, your B, your C, your D, your E, right? And then you've got your wave C. This is in essence how Arias wave works, except sometimes you get different shapes where the zigzag can be having smaller legs either side. It doesn't matter. The correction inside is always the same. Okay, so I teach this stuff in case you want to learn it. It's very interesting. I use it to trade, and I've gotten so much better at using it lately that, um, yeah, just watch my videos. So where are we in this pattern in silver? Okay, now I've waited a long time to make this video because I always had questions about what I'm looking at here. But now I believe I have the answer to this question. So this A wave that I've put here on the chart, that's here. This B wave is here. Okay, the C wave is here. Okay, and now we're in a D wave. Okay, so this is a D wave. Now I'm going to give you a trading opportunity in this video so you can understand a little bit about this concept. Okay, so this is the first part of the zigzag, and then now we're in an A wave within the zigzag. Okay, so within this zigzag, we are somewhere in here. Okay, now there are certain rules that can't be broken in the waves, which is why I swear by them. The methodology I created, it beats Elliott wave to a pulp. It doesn't stand a chance. Okay, so this is why I am using them to trade, and now you can probably, well, if you decide, you can copy trade me as well on the platform Fair Desk, but not yet. Coming soon. Check out my website. It's coming soon for now. Just trying to get the put some numbers on the board, so we can have something to start with, some stats, that type of thing. So that's going to take some time. Could take a month. Let's just see what happens. For now, learn the waves because you'll be able to follow along with what I'm doing with a bit of ease. So in this pattern, let's just go to the daily. Okay, the daily, is it going to do it any justice? Yes. Now I'm going to turn on the hidden objects that I've got here so you can see them. Okay, I've gone hide again, except I don't want to hide them. All right, there we go. Now, this is the count for the move down. 1, 2, 3, 4, 5, A. Okay, what happened here is we have a zigzag in progress. Okay, now when this zigzag completes, you just can't go above the highs. It's not going to go above the highs. Okay, this is what I'm telling you. It's not going to go above the highs. If it does, I'll buy you a cup of coffee. Right, now let's go down to this section here. Let's have a look at what's happened since this move started. All right, so you can see that there was the A wave during the pandemic. We had this thrust up that helped this grow even bigger. But then we had an A, B, a weak wave C, and interestingly enough, perfectly down the bottom, you can see a wave D and E. Okay, you can see it right there, D and E, right? Zigzag D, sharp E. So this is the bottom. Okay, what we've seen since is just wave one. And now it's had a decent enough pullback that you can actually buy it with a fairly decent um, stop. Okay, so what's happened since then, in my opinion, since that high, is you can see it clearly as well here, right? You can see an A, B, and then what looks like to be a C, and you can see a little D in there, right? And now we're in E wave. Now this E wave might be about to complete very soon because you can see the sharp long part in the middle and waves either side. So I'd say more than likely it's probably going to go down to the 0.782 area. And then if you have a stop at this level here, right, $18, you can go long. Sorry, excuse me for a second. You can go long in silver and your target is almost at the all-time highs, right? It'd be just before the top, but can't go to the top. And then what I'd suggest doing from that point in time is going short. Because when wave A is the largest, the rest of the corrective patterns, they're lower and typically lower and happen really quick, and then you get to your impulsive stage. Right? And then what you'd expect to see is similar in length to wave A. Now, we don't know where to measure that from. You won't measure that from the end of wave A. You'd most likely start measuring once you see wave E, and then you'd measure it down. Okay, so this is the type of thing I'm expecting. In terms of what's going to happen with wave E, well, that's the interesting thing about this pattern. I think this pattern is going to be extremely misinterpreted as a cup and handle pattern, right? I believe that potentially what we'll see happen at some point in time is that we'll get a bear market rally that will probably go back to the highs, fake out, and then crash, right? So what that means is I believe, and you know what, it might not even go above the all-time highs. It might go just beneath it. But in my opinion, it's going to fake out a lot of people. Now, let's go to, oh, sorry, before I finish this off, this would be the end of a large, once you get that E wave, of course, depending where it ends, this would be the end of a long-term B wave zigzag pattern. Okay, the B wave portion of a zigzag, right? So what that means is if we go back to our little diagram, this would be the end of this section here, right? So that's the B wave portion. And then you'd go down for a final high, which would go down below all the corrective patterns. And you probably can't see the first part of the zigzag here. If you go look up some historical charts, you might be able to see it. You would go down below that. So it's going to go back to worth peanuts, basically. Right. So at the moment, we've got the most hype possible around silver and gold again. And I believe it's going to be fake out. Okay, eventually. For now, even this move will be a fake out because it's going to come back down again. Right. What's next? Gold. So gold is the same thing. This is where the idea came from, right? From that zigzag pattern, except what's the difference with gold is that, well, for firstly, the first wave that happened back since 1344, that was a longer move down. Yes, gold was once worth a lot a long time ago, right? Based on whatever currency there was back then. All right. But in this case, the corrective patterns B, C, and D have already happened, and the part that was the bubble part here was E wave already in progress. Does this mean that potentially? Um, does this mean that gold will top out before silver? I reckon it'll definitely finish off its correction um, before silver, the long-term correction, right? But in terms of what the pattern would look like on the way down, well, you got to think about it logically, right? If gold starts producing a 5-wave move down, right, like this, then obviously a bounce in gold would probably end up being that wave E bounce in silver, which may not come back very far at all to the upside. And it doesn't have to, right? There's no rule saying that it must produce X length, whatever. There's no rule. There's nothing to, there's no such thing, right? So that being said, it'll just be part of a blip in the long-term pattern, especially because silver's already produced most of its correction. Especially because silver hasn't finished its correction. In the grand scheme of things, it won't be much. That little wave E bounce may not go far at all, right? And I do believe that the bond yields have a lot to do with this. I'll link that idea below, where I've been telling you since day one that bond yields will follow this pattern. But bond yields will be ahead. Sorry, hang on. No, bond yields will be lagging, right? So as bond yields continue to basically create the same pattern, except bond yields is roughly in this area of a wave E, right? Um, it still has a long way to go to get to 15 or 20%, right? And that's the type of thing that as it's going up in that wave E, gold will just turn down, right? Basically, it's a breaking point for gold. Higher interest rates is a breaking point for gold, right? And that's just the way I see it. Whether you want to talk about causation versus correlation, I don't care. The waves are telling me what I'm observing here, and it's not hard to see. This is almost done. Interest rates not quite done. So I thought I'd share this with you to clarify my gold reset idea, and also with that silver idea, I will post a chart that you can trade based on. Uh, that will give you a bit more upside than gold, and also it's in a better position to trade than gold, right? Gold is in its final move. What's really funny about this is that in my last gold idea, I did talk about this being potentially a weak 5-way move that you can trade up at the highs to go long, and I realized how wrong I was when I did my research on these patterns and what they mean, and they mean that it's the end; they're not coming back, right? I drew this yellow box in that video months ago, right? Probably like I think it was December, January. I don't know. It was a while ago. I'll see if I can find it and I'll link it down below. I drew this box before this pattern had completed, and look, it used my box as resistance. I just thought that was funny. But yeah, look, you can see that this is on its last legs, right? And if you look at the count, I've specifically drawn in every subdivision here. 1, 2, 3, A, B, C, D, E, and then 4, and then 5 is coming. That'll be the last move. And then we'll see a red candle down, and then we'll get ready to trade after we see a correction, which will point in the direction that it's not going to go in, and then take a trade down to begin this bear market profit making bonanza, right? The gold rush of shorting gold or something, right? It's the inverse of the gold rush. It'll be the opposite. But yeah, hopefully this has helped you understand gold and silver. This is the way I see it. I've never been able to make a video like this. I'm improving in my analysis every day. Thank you for watching.